Let's talk about the stock market, the so-called report card for the American economy. But what if it's less a report card and more a glittering Ponzi scheme, where new money props up old investors and the rules keep changing to protect the insiders? In a Ponzi scheme, you pay old investors with new investors' money. Sound familiar? Stock prices today often have little to do with real company performance. Layoffs, factory closures, and still the numbers go up. The system isn't about rewarding value, it's about keeping confidence high and the illusion of wealth alive. If you're not in early or don't have capital, your money just keeps the party going for everyone else. It's like being invited to a fancy dinner, only to realize you're the main course. America used to build things, cars, bridges, real stuff. Now we're experts at making money from money. The Federal Reserve prints trillions, not to fix roads or schools, but to buy financial assets and keep interest rates low. Corporations use cheap money to buy back their own stock, inflating prices without real progress. Meanwhile, China builds high-speed rail, airports, and factories. Real assets, not just numbers on a screen. One economy is built on steel and concrete, the other on debt and digital promises. When crisis hits, which is stronger, the builder or the borrower? America's bridges crumble while the stock market soars. Remember 2020? The CARES Act was sold as a rescue for Americans, but most of the money bailed out big corporations and Wall Street. The Fed bought up risky corporate debt, signaling to the market, "We've got your back." Stocks hit new highs while millions lost jobs and small businesses closed. After 2008, it was the same story. Banks got bailed out, homeowners got evicted. Losses are socialized for the rich, but if you're an ordinary citizen, you're on your own. You got a $1,200 check. Corporations got trillions in nearly free credit. The government isn't a referee. It's the goalie for Fortune 500 companies. They're rescuing the yacht while you're left to doggy paddle. The repo market is the financial system's overnight pawn shop. Banks swap bonds for cash to keep running. Trillions move through it daily, and if it freezes, everything stops. In 2019, it nearly collapsed. The Fed stepped in, pumping billions in daily to keep it alive. Now the Fed is a permanent backstop, propping up a market that can't stand on its own. This isn't a free market, it's life support. Big banks take huge risks, knowing the Fed will bail them out. It's like a casino where the high rollers always get their money back. Is that a fair game? What's behind your 401k balance? Not factories or products, but digital promises and speculation. The US stock market's value dwarfs the nation's actual economic output. Much of that value is based on cheap money and speculation, not real assets. The system is fragile, anchored to confidence, not reality. It's the greater fool theory: buy high, hope someone else pays more. But what happens when the fools run out? Retirement funds chase returns, but real productive assets aren't growing fast enough. We're building paper wealth on a shaky foundation of faith. Take the pharmaceutical industry. Taxpayers fund the research, corporations buy the patents, then sell the drugs back to you at sky-high prices. Public risk, private profit. The system in a nutshell. Corporations lobby for rules that socialize risk and privatize reward. Is the stock market a Ponzi scheme? Maybe it's something even more insidious. It's a system hooked on government support, cheap money, and protecting asset prices at all costs. Speculation is rewarded over real production. The real question isn't if it's fair, it's whether it's sustainable. When the promises outpace reality, the fallout will hit everyone, not just Wall Street.